Ladies and gentlemen, good day and welcome to HG Infra Engineering Limited Q4 FY24 earnings conference call hosted by Go India Advisor. As a reminder, all participants' line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sana Kapoor from Go India Advisor. Thank you and over to you, ma'am.
Thank you, Sejal. Good morning, everybody, and welcome to HG Infra Engineering Limited earnings call to discuss the Q4 and FY24 results. We have on the call Mr. Harendra Singh, Chairman and Managing Director, and Mr. Rajiv Mishra, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Harendra Singh to take us through the company's business outlook and performance, subsequent to which we will open the floor for Q&A. Thank you and over to you, sir.
Thank you, Sana. So welcome everyone to Q4 and FY24 earnings conference call of HG Infra Engineering Limited. The financial results and the investor presentation have been made available on the exchange, and I trust you all had the opportunity to review it. Before I proceed with the presenting of the key financial and operational highlights for the previous financial year, I would like to offer a concise overview of the sector and the opportunities it presents for HG Infra. I am pleased to announce that HG has delivered exceptional performance in FY24 across all fronts. We have achieved substantial progress in diversifying our order book by securing 4 non-road projects in this financial year. Additionally, this year marks a significant milestone as we have reinforced our presence in the highway and road sector with 2 successful new projects in Q4 FY24. Not only we have expanded our order book, but we have also taken meaningful steps toward diversification in solar power plant projects. Now, I would like to provide some updates on the infrastructure sector. Talking of roads, India's infrastructure sector is booming, fueled by a significant funding boost of rupees 2.78 lakh crores for FY24-25. With this 1.68 lakh crores earmarked for NHI, the focus is on developing national corridors. Building upon this momentum, the Vision 2047 aims to construct 30,000 to 35,000 kilometers of highways and 50,000 kilometers of high-speed corridor by 2047. This ambitious plan emphasizes the government's commitment to fostering extensive connectivity and facilitating economic progress across the country, concurrently presenting abundant opportunities. In recent decades, HG Infra has solidified its position as a formidable force in the infrastructure sector and has proven its mettle over the last many years in the EPC and HAM sector. HG sees abundant opportunity and is keen to participate in BOT mode with the association of other key players such as Highway Concessions 1, Cube Highways, NIF and other prominent players like Adani and IRB as EPC players where we are already being associated with these companies. Railways and Metro, as a part of our long-term strategies of diversifying our order book, we continue to gain considerable ground in the Railways and Metro segment. The budget has earmarked rupees 2.55 lakh crores, focusing on multi-tracking corridors and station remodeling. A significant portion of this budget is dedicated to multi-tracking 7-speed, high-speed density corridors, facilitating the expansion of rail network by 10,959 kilometers over the next decade. Additionally, the Amrit Bharat Station scheme further complements these efforts, aiming to remodel 1,309 stations by 2030, thus enhancing passenger experience and operational efficiency. The significant momentum observed across various sectors has created ample opportunities. In alignment with our strategic approach, we are prepared to grab these opportunities. With 6 railway projects currently in the order book across 5 states, HG is well positioned to capitalize on the government's initiative, and we are all equipped with the required capex technology and skilled human resource for network expansion and station development, that is modernization of existing infrastructure, civil work and dedicated high-speed railway corridors. Solar and renewable energy being talked nowadays, the renewable energy sector is gaining focus with ambitious target aiming for 450 gigawatt of installed capacity by 2030, where solar energy constitutes over 60%, and in the latest budget, 1,000 crores were allocated for SECI and rupees 19,500 for a PLI scheme to enhance solar module manufacturing. HG Infra, recognizing this lucrative prospects, proactively pursued bids and successfully received solar power projects for development under Kusum C. That is for 543 megawatt DC, valued at 1,307 crores EPC value, that is exclusive of GST. The company is also exploring additional opportunities in solar park development, solar projects, including rooftop installations. These projects win is a testament to HG as a leading EPC company in the infrastructure space. In water sector, the Jal Shakti Ministry budget has been increased to 98,418 crore for FY24-25, up from 96,549 crore in the previous year. That highlighting ongoing investment in water infra, and in second phase of Nawami Gange program, government has approved 22,500 crores, out of which rupees 11,275 crore is allocated for new projects. HG Infra is keen to participate in projects like Nawami Gange to clean the embankment and rejuvenate the Ganga river, pollution abatement, infrastructure development near the river, projects related to water desalination, wastewater treatment plants, and other water supply projects in rural urban areas like under JJM schemes. Rainwater harvesting storage under Jal Shakti Abhiyan will be our priority card to contribute with a revenue of around 50 crore for which we are targeted for this financial year. Furthermore, we are looking forward for partners with strong background with credentials to cover the technical eligibility for strategic partnership for breakthrough for projects in water sector. Let me start the journey of this quarter and give you the glimpse of operational highlights first. As I mentioned earlier, our order book has not only grown but also diversified as of March 31st, 2024. It stands at rupees 12,434 crore. That is, the EPC value constitute 28%, while HAM constitute 40%, railway segment contribute 22%, and solar segment contribute 10%. Let me now update on the ongoing EPC projects. The Ganga Expressway project has reached a milestone of about approximately 54.3%, adhering to the contractual timelines of the contract. Delhi UER project stands at around 93.1% completion, and it is anticipated to be completed in this quarter only. The Nelamangala-Tumkur project could not reach up to our expectations, and its execution status is around 28% because non-availability of the land, for which NHAI is pushing hard and for faster balanced land regulation and encroachment free. The progress of various HAM projects is also running as per the planned schedule. The Karnal Ring Road project has achieved 23.9% completion milestone and is progressing well within the established timelines. Raipur-Visakhapatnam OD5 project has progressed to 65.9% completion, and we look forward to complete this by Q3 of this year. Raipur-Visakhapatnam OD6 project is currently at about 73.7%, and the same would be completed by Q2. The Raipur-Visakhapatnam AP1 package has achieved a completion status of 69.5%, and the same will be completed by Q2. In the Khammam-Devarapalle project package 1, where we have achieved 50% completion, while package 2 is at 53.7%, both the projects would be completed by Q3 and Q4 respectively. The Varanasi-Ranchi-Kolkata package 13 and 10 is currently in the initial stages of land acquisition and are anticipated to pick up momentum in second and third quarter respectively. Turning on to the progress of the railway projects, DMRC metro project has reached completion of about 50%. Bilaspur Himachal Pradesh railway project has progressed to 10.3% completion, though initially it was delayed due to heavy rains because of the backwater of the dam. It is now progressing well. Kanpur Central Railway Station project has recently commenced with a completion status of 4.12%. Let me now invite Mr. Rajiv Mishra, CFO of the company, to give an overview of the financial highlights of this quarter and overall FY24.
Thank you, sir. Last year, ICRA has upgraded our ratings from stable to positive for our long-term, short-term facilities and NCT on account of the financial growth and discipline. Our financial performance in the last quarter and the entire year has been satisfactory. At the standalone level, the total revenue of FY24 has reached 5,122 crores, reflecting an impressive 15.9% year-on-year increase from 4,419 crores in FY23. EBITDA amounted to rupees 822 crores in the current fiscal year, resulting in an EBITDA margin of 16% compared to 710 crores and 16.1% margin in the corresponding FY23. PAT for FY24 stood at rupees 546 crore with a profit margin of 10.7% compared to rupees 421 crores and a margin of 9.5% in FY23. In Q4 FY24, standalone revenue reached at 1,635 crores, representing a significant 11.2% year-on-year growth from 1,417 crores Q4 FY23. Standalone EBITDA for Q4 FY24 was rupees 265 crores, reflecting a year-on-year growth of 11.3% PAT, and PAT margin for Q4 FY24 stood at rupees 160 crore and 9.8% respectively, compared to 148 crores and 10% in the same period of the previous fiscal year. Regarding the company's debt position on a standalone basis, the gross debt amounts to rupees 451 crores, including working capital debt of 69 crores, term loans, current maturity, and the trade limits totaling to rupees 334 crores and NCD of rupees 48 crores. Moving on to the consolidated numbers, for FY24, revenue reached to rupees 5,378 crores, growing at 16.4% year-on-year increase from 4,622 crores in FY23. EBITDA reached rupees 1,062 crores with an EBITDA margin of 19.7% compared to 895 crores and 19.4% margin in FY23. PAT for FY24 stood at rupees 539 crores with a profit margin of 10% compared to 493 crores and 10.7% margin in FY23. In Q4 FY24, the consolidated revenue reached to rupees 1,708 crores, making significant 11.3% year-on-year increase from rupees 1,535 crores in FY23. Consolidated EBITDA for Q4 FY24 stood at rupees 333 crores, reflecting a year-on-year growth of 12%. PAT and PAT margin for Q4 FY24 amounted to rupees 190 crores and 11.1% respectively, compared to 131 crores and 11.1% in the corresponding period of the previous financial year. In the context of the company's debt position at the consolidated level, the gross debt amounted to rupees 1,500 crores approximately. The total equity requirement of 10 HEM projects is of 1,461 crores, out of which we have infused 694 crores in this financial year and 505 crores is estimated to be infused in FY25. Let me give the glimpse of the status of the monetization of 4 HEM projects. First tranche of the 3 projects which are sold in the last year, completion of 3 SPVs, Gurgaon Sohna, Rewari Ateli and Ateli Narnaul. They have been completed on 21st November 2023 with 100% SPV shares transferred from HG Infra to Highway Infrastructure Trust. We have received 315 crore as of now, and rupees 60 crore will be released on the receipt of approval from NHI for GST change in law claim. It is expected to be received by June 2024. The second tranche, as far as the updates on the monetization of the 4th project, Rewari Bypass, is concerned, we have received NOC from NHI and lenders for the change in the shareholding in March 24. Compliance of the conditions precedent as per the SPA is in the process and expected to be completed by May 2024, and the transaction is expected to be completed by June 2024. Around 130 crore is expected to be received from Rewari Bypass SPV. For other significant updates of FY24, I would now request MD sir to take over and share the developments with the forum. Thank you, sir.
Thank you, Rajiv. Let me now share other significant updates for FY24. Though initially we have projected to get around 8,000 crores of new projects during FY23-24, however, due to the all-time low awarding by NHI, we ended this year order addition at rupees 4,350 crore, that is exclusive of GST. In Q4 FY24, the company effectively secured 3 new orders in the railway sector in EPC mode, that is Dhule to Nardana railway project in the state of Maharashtra, that is on Central Railway worth 716.11 crore. Aurangabad Karanjgaon Railway Station project in Maharashtra, that is inclusive of electrification and signaling work from South Central Railway, valued at 447.11 crore. Gaya Sonnagar Railway Station project, that is a DFCC project in the state of Bihar, awarded by East Central Railway for construction of double lane track including earthwork blanketing on the electrification works, that is valued of 709.11 crore. These all projects are inclusive of GST. The two new projects of highway were awarded Chennai-Tirupati Package 2 in the state of Andhra Pradesh for construction of access control highway of 4 lane on HAM, that is having the EPC value rupees 760 crore, and Kali Mandir Dimna of EPC mode in the state of Jharkhand, near to Jamshedpur, that is 610.11 crore. Universe of solar and renewable energy, we are happy to share for forum, the company has entered in the solar segment and has been recently awarded solar power project development work at the Kusum C for 543 megawatt DC of rupees 1,307 crore EPC value, which is excluding of GST. The company has secured contracts from Jodhpur Vidyut Vitran Nirman Nigam Limited on the Kusum C Yojana, collaborating with Stockwell Solar Services Private Limited in JV consortium. Together we will work on the solar power plants totaling 528 megawatt DC, that is worth rupees 2,300 crore. The works involve procurement, erection, installation and commissioning of the plants within a period of 12 months from the date of PPA and then maintaining them for 25 years. These projects will be executed through project SPVs. In addition to that, HG Infra has also won two small solar projects of 12 megawatt worth 62 crores. The total equity requirement in the solar project is estimated to be rupees 540 crore, out of which we would infuse rupees 270 crore in FY24-25 and balance in 25-26. Let me touch base on the future guidance before I conclude this pitch. This year is very vital for us in terms of our physical progress in our running projects, as we are heading for the completion or nearing completion for many of our road projects like UER, Khammam Devarapalle Package 1 and 2, Raipur Visakhapatnam Package Orissa 5 and 6 and AP1, and even Ganga project. With that, certainly we will have to add new projects for which we have to work on the order inflow to the tune of rupees 11,000 to 12,000 crores in road, railway, solar and water to sustain and scale our business to create value for the shareholders and ensure healthy order book. So we are geared for the next growth phase of the company, and we believe that we will achieve 15 to 20% growth in the top line in this coming year and maintain steady margin in the range of 15 to 16%. We have all the ingredients to achieve the milestone with all senior leadership in place, skilled manpower, strategies to move on, digital transformation, with automation capex, think tank team to explore diversity in business. These strategic moves are poised to contribute significant value to our financial indicator, fostering a seamless and transparent real-time working environment, and will truly help us to augmenting our operational efficiency, and cost optimization factor will positively impact on our bottom line. We can assure to all our internal and external stakeholders that we are committed to solidify our success footprint in the financial year. I conclude the dates of FY24 and open the floor for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, you may press star and 1 to ask questions. The first question is from the line of Dipen Shah, who is an individual investor. Please go ahead.
Yeah, good morning and thank you for this opportunity, and congratulations to the management on a good set of numbers. Sir, I had a couple of questions on the new areas of operations which we are entering. Firstly, on the solar segment, we have got 3 contracts.
There are more than 20 parties in the conference.
Worth about 1,300 crores. So just wanted to understand, like, in terms of our capabilities.
There are more than 20 parties in the conference.
Sir, am I audible?
Yeah, please continue.
Yeah, so just wanted to understand in terms of capabilities, how are these projects different as compared to what we have been doing, and how have we built up the capacities for installation of these projects? The second thing is that since this is a private party, but it is under the KUSUM scheme, so how confident or how comfortable are we about the receivables from this project? So this is the set, and I have another set for the new business, which is Namami Gange. Thank you.
So your question remains that this is not the private party contract. This is a Rajasthan Discom, which is a Jodhpur Discom. They have awarded. The consortium has received the project, which we have split into 2 parts, that they would be doing, Stockman would be doing 35% of the total project value, and balance 55% of 1,300 crore would be done by HG. So this is one, confusion into it. The second part is, in EPC, these projects do have 85% procurement. That is all related to module and structures and electrical works where the poles and transmission lines being laid. So the only 15% of the work which remains civil is the area grading level work and even fencing. So this is we have already done during 2012-13 when we worked for Lanco earlier this year. So it's not that difficult. It's a very normal kind of a project. So it's only procurement part. So we do have already has carved out our initial stage EPC team within the company. So that's already has been processed, and we would be doing within the company itself.
Okay. And sir, since about 85% of the project is procurement, would margins be similar to what we have currently in EPC contracts, or would they be lower than the existing margins, sir?
No. So we have kept both the provisions. So since the projects are having the tariff, which is the average 3.27 rupees, 3.27 is the average tariff we're usually getting. So we have maintained the EPC margin guidance at about 15 plus in these as far as EPC cost is concerned, as well as equity around about 15%.
Okay, sir. And the project of 1,300 crores includes the maintenance also. This is only the EPC part, sir.
It's purely EPC. It's purely EPC.
Okay, it's purely EPC. Okay, and sir, on the Namami Gange front, there have been talks in the market, previously about the projects not getting, completed on time and there being receivable problems. Any take on that, sir? Are things smoothened out quite a bit now when we do not see such problems?
It's an initial discussion which we are doing with one of the army where they are already has involved into so they have completed 2 of the water projects. So we are looking into this sector where probably JGM or water sector projects are all there, water desalination plants and water treatment plants. So it's the only initial points which are discussed during the speech.
Okay. And sir, lastly, just one question. We have given a guidance of about 15 to 20% growth, which should be about around 6,500 crores. Of which, how much visibility we have in terms of existing projects which are continuing, and how much are we dependent on new projects starting during the year, sir?
The dependency on the new project for this current fiscal year that we already have considered 700 crores to be added from the new projects. That is from high railways. Otherwise, all the projects which we are already having, since they are all under execution, they would be contributing significantly in this particular number.
Okay, that's great to hear, sir. Thank you very much, and all the very best to you, sir.
Thank you. Ladies and gentlemen, you may press star and 1 to ask questions. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you, sir. Just again, trying to understand both on order inflow and the revenue part. So when we have approximately 10,000 to 12,000 crore kind of order inflow versus last time we have said 8 to 10,000 crore. So first, in terms of the breakup from which particularly have EPC, solar, water, railway, how much we are looking at of this 11 to 12,000 crore, and also given the kind of competition will be there, particularly in the muted. So will it not be coming at a lower margin?
For the guidance for the coming year, which is around 11,000 crores, which we believe that because of the last year ordering, which is all-time low for NHAI, so this time they would be definitely post the elections, they would be awarding, they are having strong bidding pipeline. So that I believe from HAM as a HAM opportunity or EPC opportunity in highway. Even the MSRTC project, which could not be awarded during the last year, they are all having around 90,000 crores plus of orders they are going to award. And it's a 60,000 crores plus order. So this is likely one of the opportunity which we would be looking at. Another, apart from this, we are already having the discussion because the NHAI is looking at BOT around 2 lakh crores of orders to be awarded in BOT front. So in this particular, already being contacted by from prominent, as we have discussed during my opening remarks, that we are already in the close connection with these companies that we would be doing their EPC part. And this how for highway opportunity we are looking around 8,000 crores of orders to be added, and around 3,000 are balanced from what where we already have been discussing that we would are looking into this sector as a promising sector, and say just a small part of the solar as well as definitely 2,000 crores plus from railways.
Okay, so 2,000 crore plus from the railway and solar and water would be less than 1,000 crore combined put together that we are looking at this year.
Correct.
Okay. And second, in terms of the coming back to on the revenue again, so 50% into 6,000 crore plus kind of a number for this year. So similar run rate we looking at for FY26 also?
Yeah, of course, because the order which is around 12,500, if we usually are looking at what we did last year, around 16% year on year. So we again would looking at this number, they would have been even better if the appointed date of Jharkhand package 10 and 13 would have been declared. But definitely it has been delayed because of various reasons. But now we are very clear that we would be touching around say around 17 to 18% year on year for this year, and it would be continued for the subsequent years as well.
Okay. Great to hear that. And then this, whatever this 12,000 crore plus book is there. So from that, we are looking at the major revenue and only 700 crore revenue we are looking at in FY25.
Just to clarify, 700 crores from the new railway project, that is where the land is also available, and 500 crores we have considered from solar for this year, and say the projects of Jharkhand package 10 and 13 where the appointed date would be declared in this year only. And again we are talking of the Jamshedpur and Tirupati project where it's only a matter of only financial closure in one of the projects because the land is almost 90% plus available in both of these projects. So this gives us immense confidence that we would be touching around 6,000 this year.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your question to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Parikshit Kandpal from HDFC. Please go ahead.
Yeah, hi Harinderji. Congratulations on a good quarter. So my first question is on the solar EPC. So can you help us understand a little bit more on how is the supply chain tied up for this? What are the price escalation clauses? Are the prices passed for the modules? And you are investing almost 520 crores, so why is equity so high at 40%? So and how do you exit?
See, first part is looking into the supply chain issue, as we have understood that there are about 50% of the project EPC is a module, which we already have booked with 2 prominent suppliers, and that is around say, at a rock bottom price, which is around, but as of now it has never been booked, so around 13 rupees per megawatt. That is the one move which we have already taken. The second part is the other electrical ancillary work, transformer, inverters and other things. But there are a regular pattern. We do not expect any price escalation because we have taken the provision of price escalation, just a 5-year strand which we have seen. Apart from the solar module, these are all the products which are all stable. Say the one part and the second part which is very important, the equity and the monetization. So we are looking into this part where the equity definitely is around 500 plus crore rupees, which is we may be able to monetize the project if the equity IRR is this much, and we already have seen that few projects have been monetized once they have been completed. But even if